Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's video, Anthony Power and I are going to be laying out the top 4 reasons why we love holding Bitcoin mining stocks as opposed to ETFs or physical Bitcoin. Now there's been a lot of discussion in the market recently about how to position yourself and get the maximum exposure and upside to the underlying asset being Bitcoin, and we think the Bitcoin mining companies or Bitcoin mining stocks offer a very unique and interesting way to get this exposure. Now before we get into all that, please take a second, smash the like button, you guys. It takes a second of your time. It's 100% free to do and Anthony loves it. If you're not already subscribed, McNallie Money, feel free to join. And let us know in the comments section below if you agree with these 4 points, if you have any others that maybe we missed, and your outlook on the price of Bitcoin for the remainder of 2024. And with that being said, let's get into today's video. Guys, so that's right. Today's video, Anthony Power and I are back. We're going to be discussing the top 4 reasons why we prefer holding Bitcoin mining stocks as opposed to spot Bitcoin or even the ETFs. Now, this is a topic that came up. There was a lot of discussion around this, really around the halving, Anthony, about how people were positioning their portfolios. It's kind of fallen off a little bit, but the Bitcoin mining companies, specifically IREN and Core Scientific, have been slowly creeping up and really making a strong run compared to the ETFs or the price of Bitcoin. So we thought it's time we dust this one off and we give you guys our bullish thesis on the Bitcoin mining stock. So Anthony, welcome. How are you doing today, buddy?
Yeah, doing really well today. Thanks.
Right on. We've got your new mic today. We've got a new recording system. So let us know how the audio sounds. First and foremost here, you guys, the top reason we like holding the Bitcoin miners, we're going to lay all 4 out in order for you here. Number 1 is obviously exposure to Bitcoin. Anthony and I are Bitcoin maxis. We're long-term believers in the technology, the amount of information that the blockchain can provide, and the problems really around the world that Bitcoin can solve. Whether you think about financing wars or taxation or inflation, deflation, Bitcoin has so many attributes that really make it a strong contender for the economy. And Anthony, I actually saw Trump is now starting to endorse Bitcoin, bring it in as part of his political platform. He's accepting donations in Bitcoin and even asking if this is a way to solve the national debt problem and inflation. Then on the other side of the coin, we've got the Biden administration, who is traditionally opposed to Bitcoin, realizing that they may be losing millions of votes over this stance, and now they're opening up to it. So Anthony, first point here is upside to Bitcoin. It seems to be a hot topic in the political race here in the United States. We're now starting to see other companies adding Bitcoin onto their balance sheet. We've got the ETFs buying it. And at the end of the day, Anthony, Bitcoin miners are able to produce Bitcoin at a fixed price. So you're getting a real levered exposure to Bitcoin upside. What's your thought on that point?
Absolutely. Just looking at what happened this year in terms of the approval for the spot ETFs and people's move into that investment sector, it's achieved targets that nobody even began to anticipate. The days it took, for some of these companies, I think we've already got BlackRock now have got more Bitcoin than GBTC, and they're constantly buying more. It's the growth and from the mine perspective, which we're interested in, that's great for mining companies, because if they're buying more Bitcoin and there's a scarce supply, only 450 Bitcoin are produced a day, and there's more than that being purchased by these ETFs. So that's great if you're holding Bitcoin. It's great if you're holding miners, because there is a correlation to some extent. We've seen it decouple a little bit this year, but generally over the last 3 years, as the Bitcoin price has changed, the mining stocks have also benefited as well. So when we had the highs in 2021, we saw the mining companies also have significant highs. It has tapered down a little bit. I mean, there is still volatility in the space, and we can see that on some of the gains that some of these miners achieve each day. But no, you're right to say, that is a good point. That one of the reasons why we're certainly holding mining stocks as well as Bitcoin and other investment products associated.
For sure. And we both do hold spot Bitcoin. I have some of the Bitcoin IBIT Bitcoin ETF as well. But the difference for me here, Anthony, it has to do with your comment around scarcity. As the price of Bitcoin appreciates, you guys, there's going to be more and more FOMO, essentially, from institutions, from countries, from individuals. People are going to want to buy this asset. Now, the difference is if you're buying spot Bitcoin, you've got to pay whatever spot price is. If you're buying ETFs, they're obviously a 1-to-1 ratio. You're paying whatever that ETF's trading at. With the Bitcoin miners, they're able to produce Bitcoin at a fixed or relatively fixed rate now since we're through the halving, and they can choose what they want to do with that Bitcoin. They don't have to sell it. And you start thinking about, Anthony, yeah, 450 Bitcoin produced a day. If these miners get together and say, hey, you guys, let's just stop selling Bitcoin for a month and see what happens, it really puts a lot of pressure on those other investment vehicles, and the miners are in a position of power. So for me, that's definitely a key difference, you guys, in thinking about the cost to actually acquire or produce the coin. Now, secondly, Anthony, this is one that we're starting to hear a lot more about in this space. Energy infrastructure, access to energy infrastructure, power purchase agreements, megawatts under management. This is something that really came out of the AI boom here, which we'll talk about in a second. There's so much demand now for compute power, for data centers, for access to infrastructure, all of which these Bitcoin mining companies, for the most part, with the exception of maybe Marathon, who is kind of the asset light model, they've been investing in this infrastructure for years and years. They already have all of this stuff at their fingertips. And all of a sudden, the entire world is looking for this infrastructure. What do you think about that angle, Anthony?
Well, we discussed this yesterday on the live podcast, and you go back a couple of years ago, and majority of these mining companies were sort of like low single digits in terms of exahash. But you've seen the growth of a number of them now. 7 or 8 of these companies now are sort of heading, well over double digits, and there's a group following that into that double digit. Then, I mean, I remember about 7 or 8 months ago, we talked about 10 exahash being the sort of benchmark to get to the next tier. Well, I think we changed that figure to 20 exahash quite quickly because it was a growth. Now with that, comes an issue because these mining companies don't want to stop in 2024. They want to grow further in 2025, 26, and keep it going through the next cycle. And the challenge is, and we've had Jason on the podcast who quite rightly said, gone are the days where companies will be able to get a site the size of Corsicana and have everything in one place there. You'll see a lot of miners buying these smaller sites, maybe 100 megawatts, maybe 200 megawatts as a larger facility. And we're starting to sort of see that. We've seen CleanSpark buy some smaller sites to try and get their infrastructure ready for their growth to 32 by the end of the year. But there's only sort of 2 miners who have exposure to really large sites, and that's the Childress site owned by IREN, and then you've got Riot, who have effectively the 2 largest sites in the world, the Rockdale facility and Corsicana. But if you look at the likes of Bitfarms, who we've talked about intensely this week, they've got close to 13 sites. And at the moment, their hash rate is 7 exahash. So you can imagine there's some fairly small sites there in certain areas, which are going to grow bigger. But they're managing to put their footprint in like 3 countries or 4 countries, 13 different sites, and growing those sites as organically, but nothing like what you've seen in the past. And that might be the way forward. And that's probably that bottleneck of infrastructure and effectively power, because you're going to have to find these sites close to power. So it's not just about having a facility. You've got to have the power available, and you've got to have the power at a reasonable level. Bear in mind, we've just gone through a halving, so all your costs effectively doubled because your rewards coming through now are half of what they were prior to April the 19th. So you're looking for, to reduce those costs. And there's a couple of ways that miners have been able to do that. One is to find cheap power and or operate in such a way that the power costs come down. So, we've seen miners underclocking their machines and, achieving a cheaper power. The likes of Core Scientific, the likes of Riot Platforms, the likes of IREN, Cypher, and I imagine, although they have a cheap power, will probably do the same in Texas because of the curtailment. So, even better rates of power. The other factor is buying more efficient machines that can actually then reduce the power cost as well. So if you've got an S21 and you're currently running S19s, the S21s are twice as efficient as the S19, the original S19s that came out 3 years ago. So,
and Anthony, just to tie that back, you guys, as these machines get more efficient, or the computing becomes more dense, that means that they can repurpose other portions of these data centers for things like AI, HPC. So that's how it's all related. We talk about energy infrastructure. At this point in time, you guys, the miners are choosing to use that infrastructure for Bitcoin mining. But as we move into the third point here, Anthony, we'll soon see.
Just want to reiterate on that on infrastructure there. The likes of Core Scientific, which is a fantastic example there, they're able to remove some of their S19 machines in some of their sites and replace them with S21s, and therefore effectively increase their hash rate by a further 10 exahash, which takes them over 30 exahash without physically actually increasing the size of the facility.
I saw
because
that
these machines are using less power and they're twice as efficient. So that's something that the mining companies will also be looking into. And bear in mind, S19s are still in a lot of these portfolios. Yes, we've seen the big orders for S21s, T21s, the M60s from Riot Platforms, but all those miners, noted there, still have some of these older S19 machines. And so that gives them an ability to sort of like repurpose those, maybe, and Core Scientific would look to sell the S19 machines, not going to stop using them, they'll sell them. Or again, they might put them into storage and use them as and when, there's an opportunity to sort of, if the hash price increases, they can maybe, purpose them. But if they're going to buy new machines, then they could sell the S19s and that would like give them part way towards that cost there. So there is an incentive for mining companies to look at that, and some are doing it definitely, and they're announcing it as well.
Yeah, I'm glad you brought that up. I actually just saw that tweet and slide. I'll throw it up on the screen about Core Scientific. They don't have to physically build or do anything. They just have to basically backfill their old machines. And that's a perfect segue to the third point here. The third reason I'm myself and you, Anthony, so excited about the Bitcoin mining sector is the AI HPC opportunity. So as these companies repurpose these data centers, more efficient machines come out, and the mining optics and revenue profiles change, as we heard from Sam Tabar, he would need Bitcoin in excess of 100K US to compete with the margins he's getting on the HPC side. This to me represents another absolutely golden opportunity, Anthony. The AI tidal wave, as it seems, is very comparable to the launch of the internet. And I've seen a lot of notable people saying, hey, this is the absolute change of our generation. And again, the Bitcoin mining companies, Anthony, they are front and center, right place, right time, with the right business mix and infrastructure to cater to this AI HPC realm. So I wanted to get your take there. This is one that we've seen a lot of the companies move into. Interestingly enough, Anthony, you talk about CleanSpark and their bigger facilities being self-purchased and vertically integrated. They don't have any exposure to HPC. And I saw Sebastian just posted last night, he actually sold out of his entire CleanSpark position. So it's going to be interesting to see how people start to rebalance their portfolio to get exposure to this HPC. And the other thing I wanted to just quickly say, Anthony, you talk about some of the smaller miners and the new small sites being the way forward for Bitcoin miners. I couldn't agree more. And we really see on the performance side of things, from players like DMG, from SATO Technologies, from Gryphon, extremely strong production and efficiency. And then from companies like Soluna, extremely strong business models and revenue profiles that are actually attracting external investors to these new projects like we just saw with Dorothy too. So I just wanted to put a quick plug in for the smaller miners because there was a lot of concern post halving. What are these guys going to do? And it really does seem like that may be the way forward long term here. So we'll park that. We'll get back to HPC. Anthony, what are your thoughts on HPC AI? Do you think it's here to stay?
HPC is here to stay. People are already seeing what the benefits are of using HPC on a day-to-day basis. So I think most people now, I mean, I think it was that ChatGPT had the fastest usage to 100 million users, just literally weeks. It took Facebook over, a few years to get to that number. It took ChatGPT literally weeks to get there. So there are certain benefits, and that's just one example. There's many more examples of what it does there. And I know people who've set up businesses and able to use these type of software and technology to help help create that business. So it's so there's a real use out there. There is always a concern, is that there's a couple of concerns. One is that these are Bitcoin miners, and you're going to get people saying that they should stick to what they know. But these are data center managers. Effectively, they're managing large data centers. Bitcoin mining just happens to be what's in the data center. So managing a data center with Bitcoin miners, managing a data center with GPU servers. Yes, the requirements are different, and we've talked about that on many podcasts before. But for some of these smaller miners, and you've highlighted Bit Digital there, and then the likes of Soluna Holdings, the likes of Hive, the likes of Digital Hive, the likes of Hive Digital, the likes of DMG Blockchain, who are moving into this space. It's going to be a great source of revenues to help them maybe grow. I mean, we're always looking for how these miners are able to grow, and there's not many levers available. The debt lever isn't really an option for miners at the moment, because the market doesn't perceive that stability to offer them the rates of interest that other industries are probably have the opportunity of utilizing. So the lever's open to say a smaller miner to grow, the likes that we've seen in terms of compared like CleanSpark, it's limited. That their market capitalizations are low, so they'd have to sell an enormous amount of shares at the moment to get that capital growth. But by using good fixed income from AI, and Sam's a perfect example. They've got a massive client with a great annualized revenue at 50 million going to 100 million. That's more than they're going to earn in Bitcoin mining this year, and they've got 2.5 years of that contract to go. And so that's going to be a great source. That money, he already articulated, about what he's doing with his staking rewards. Well, with the benefit of the HPC, that can help grow their Bitcoin mining service, or it might even help grow their HPC business, to be the main focus of where Bit Digital get to. The other downside to think about is that the market's not really giving any specific valuation in terms of some of these additional businesses that these miners have got. So at the moment, it looks like, you look at the valuation of Bit Digital from a mining perspective, and the fact they've got a significant other revenue stream coming through, notwithstanding they've also got a bit of a revenue stream coming through from the staking. The market's not really picking up on that too much there. Also, the likes of Hive Digital, I think we talked about yesterday, valued at 240 million, probably less than that today because the prices are down again today for a number of miners. And so, you've got a company there with 5 exahash and a HPC business that is planned to get to 15 to 20 million of annualized revenue this year. Not really getting the market to sort of value that anywhere near what their sort of like peers or the likes of, what IREN are value starting to become value now. So we've seen the likes of TeraWulf, we've seen the likes of IREN, we've seen the likes of Bitfarms have in the last sort of 12 months started to have a more sizable market capitalization. And bear in mind, 12 months ago, Hive was in that group with these here, but because it's not grown Bitcoin mining as fast, and it's focused a little bit on its HPC because it had a load of GPUs available from the Ethereum days when it was mining Ethereum. So it's utilizing those and buying more GPUs from NVIDIA to grow the HPC business. It's just not getting any credit. So there's an upside in one respect, and there's also sort of like a downside to it, and the market's not is not focusing, or doesn't appear to be focusing too much on that. And then you have the sort of, with HPC, what type of service can these mining companies deliver? Because we know that a lot of the miners are in locations where they are operating where they have to curtail, and HPC, to run a proper HPC business, you need uptime to get the highest amount of revenues. If you can deliver 99.99% service in HPC, you'll get the top revenues. If you're delivering 95% or 90% or 85%, then you can't command those big revenues. So you have to take a discounted revenue there. You probably, in some cases, have to effectively go on demand, and maybe for for training applications which don't require constant uptime, so they can deliver those type of projects. But that will be affected in the revenues then, and then again, it affects your return on investment. So I know there's certainly people speculators why some of the miners are going there, and there are some reasons for definitely going into there, and there are some reasons for sort of taking a foot. But when you look at the numbers that Bit Digital posted, you have to look and think, well, that was a great decision for them to go through there, because the margin, even after handing back, I think 1.3 million, they still made a margin of 61%, and it would have been closer to 72% had they, and this was in the first few weeks. It was only a case of, in the setup time, these contracts have an uptime requirement, and so Bit Digital will be fully focused on making sure there's no more of any penalties going back to the client, and getting that full reward. But yeah, it's good for some of these smaller miners to do it, because it'll help them grow organically from a Bitcoin mining perspective, or maybe move straight into HPC and realize actually that's the more stable business going forward. And Sam's talked about that as well.
And that's what I expect, Anthony. You mentioned that 1.3 million give back from Sam. I would expect that's kind of just growing pains their first month, but I do anticipate down the road, it might not just be power mining analysis, it might be power AI HPC analysis or something like that, as companies continue to explore. And again, you guys, back to the root point of this video, you're not going to get that upside potential of AI HPC if you're holding spot Bitcoin or the ETFs. It's just not going to be there. And keep in mind, HPC AI doesn't move on the same cycles as Bitcoin. You're not on a 4-year boom bust kind of cycle. So non-correlated revenue streams seems to be a growing industry, very high margins, and another great reason to hold the mining companies. Now, the fourth and final point here, Anthony, I left this one for last because it doesn't apply to all miners. In my mind, another key point of this sector is the hodl. Whether you're talking about Ethereum in the case of Bit Digital with the approvals on the ETFs there, or you're talking about Bitcoin itself with a good portion of the core miners, to me, this is a huge attraction to this sector. And again, you guys, it's not just the fact that they hold Bitcoin, it's the fact that they created these Bitcoin for well below market price. And the thing I want to instill in you guys is, as we approach all-time highs with Bitcoin, that essentially means every single company that has a hodl is in the black or profitable on that hodl as we get closer and closer to all-time highs. Many of these companies have been hodling aggressively over the last year, and their average price on those coins is well below where it's at now. So Anthony, you look at MicroStrategy, you look at companies like Tesla. Yes, they've got the biggest hodls in the world, but not far down that list is a good group of these miners, the Hives, the Huts, the Riots, Marathon, CleanSpark. They've got a lot of Bitcoin. And I think a great comment I actually saw on Instagram the other day, Anthony, if you are a Bitcoin maxi and you believe Bitcoin will eventually be the most valuable resource or asset in the world, why would you not want to have a hodl? So I'd like to get your thoughts on that one, Anthony.
And yeah, I've reiterated in the past that as the Bitcoin price rises, it's a great strategy. It's about what you do when the Bitcoin price starts to fall. And I had conversations with Jamie Leveson a couple of years ago, and asked her directly, and they were hodling everything in that period, and to a certain extent they've maintained that hodl. They've just been using in the last year or so. They've been using their operational mined Bitcoin to cover some of their costs. So they've not been extensively growing their hodl, but they've been maintaining their hodl. And she said she would, at that point in time, when they hadn't sold any Bitcoin effectively, they were going to sell at $500,000. That's when they would start considering to sell Bitcoin. So they were really bullish on it. You have two polarized views. It's very, and both can, put forward a strong case as to why they each do what they do. But you have to look at the likes of Marathon, who've got 17,000 coins, and that gives them well over $1 billion in terms of hodl valuation. And then Riot and Hut, both of them close now. Hut over 9,000, but I imagine as we speak now, Riot are all also over 9,000, because they were getting close to that. So again, that's over 600 million in terms of hodl. And Jason said exactly what you've just articulated. They're not going to start. So they're not selling Bitcoin. That's their strategy. But we'll have Dan on next week, and Dan will give an opposite argument. And we've had Paul Prager on the podcast as well, and he was very vocal about his position. And but also, it looks like, when we talk about TeraWulf, they've had a sort of like a change in terms of like their focus now is maybe to look at using the ATM to grow organically, and maybe if they do that, they can start to save some of the hodl that way. But mining companies can change strategies. Core Scientific, up until about a year ago, they were selling Bitcoin pretty much every day, but then they decided to start basically saving their production each month, and they're getting towards like 6,000 coins already. So it's great when the Bitcoin price is going up, but equally when the Bitcoin price falters, and we saw in 2022 mining companies selling Bitcoin really, really quick. I think that April-May period, there was thousands and thousands of Bitcoin being sold in that couple of months there by all the miners, because the Bitcoin price just kept dropping and dropping. It was down to less than 40,000, and we'd seen mining companies even buy Bitcoin, and it didn't materialize. They had to sell Bitcoin. They sold it at a loss, and so it's like to a certain extent, it's you're obviously gambling on the fact that the Bitcoin price will rise. And I think for a long-term perspective, we all believe the Bitcoin price is going to keep on rising. It's just that we know there are cycles, and if it adopts previous cycles, we know that there's going to be a period where it does fall. And what do mining companies do then? So when these hodlers say they're going to hodl, are they going to hodl when the Bitcoin price keeps falling, and then they have to announce unrealized losses in terms of Bitcoin valuation on their income statements? Because now they've all adopted the FASB rules. Those that weren't already adopting it through the International Financial Reporting Standards, so the IFRS standards, those companies now are sort of like having to sort of make sure on the end of every quarter what that Bitcoin price is, because it can affect their bottom line in terms of, we saw in the first quarter of 2024, fantastic news for all these miners with Bitcoin. All of them made massive net incomes. But on June the 30th, that Bitcoin price better be over 70,000 or 71,000, because if it's not, then that figure then starts coming down. And
might be a different tune.
Yeah, and so time will tell. But I think Marathon and Riot and and Hut there with the size of those hodls gives them more ability to do a lot more things with having a hodl of that size, and they can maybe borrow against the hodl and grow that way as well. So it does open a few more avenues, but we are in a cyclical industry where we have bear markets and bull markets, so something always to watch. But it'd be interesting to get Dan's perspective next week.
Yeah, I'm looking forward to that, and it will be interesting to see as the market cycles change. Anthony, very interesting points today, you guys. Hopefully this instilled some confidence back into the sector, you guys. There's definitely some reasons to love these companies. Obviously reasons to love other investments as well, but the Bitcoin mining sector, in our opinion, definitely has something special. Leave a comment below. Let us know whether or not you agree with this sentiment. If there's any other features of this sector that you really like or dislike, make sure you hit the like button, subscribe to the channel. Anthony, we appreciate the time, and we'll see you tomorrow.